All right, everyone, welcome back to Crypto Brain. Over the past few days, a discussion has been quietly building within the XRP community that has genuinely surprised many experienced investors. The reason is simple. Suddenly, the White House, institutional finance, and the XRP ecosystem have all begun appearing within the same conversation. And perhaps the most interesting aspect of this entire situation is that this discussion is not being driven by social media rumors or retail speculation. Instead, the focus has shifted towards developments that are taking shape at the financial infrastructure level. While much of the market has remained focused on Bitcoin's price action and short-term volatility, a completely different race has been unfolding behind the scenes. A race centered around stablecoins, tokenized assets, institutional liquidity, and next-generation payment networks. As a result, some analysts are now openly asking a very important question. Are the majority of retail investors still watching price charts while institutions are quietly building infrastructure? What makes this even more fascinating is that discussions surrounding digital assets, regulatory clarity, stablecoin adoption, and blockchain-based financial systems all appear to be moving forward on a similar timeline within the United States. Naturally, this has created growing excitement among XRP supporters. Has the market missed an important signal? Are institutions quietly preparing for the next phase of blockchain infrastructure? And is the XRP ecosystem positioning itself at the center of these developments? That is exactly what we are going to explore in today's video. If we are being completely honest, the crypto market has always been obsessed with price predictions. Investors constantly ask how high Bitcoin could go, where XRP might be heading, and which asset could outperform during the next major bull cycle. However, history repeatedly demonstrates that long-term winners are rarely identified solely through price action. More often than not, they are identified through infrastructure. This is precisely why the latest conversations surrounding XRP are attracting so much attention. To understand the significance of these developments, we first need to recognize that institutions and retail investors view markets through entirely different lenses. Retail investors focus on returns. Institutions focus on systems. Retail investors focus on momentum. Institutions focus on efficiency. And when trillions of dollars move through global financial networks, efficiency, compliance, liquidity, and scalability become critical priorities. Within this context, many analysts are beginning to view the XRP ledger and its evolving infrastructure as increasingly important. A large number of investors initially failed to understand why institutions were suddenly showing such strong interest in blockchain infrastructure. The reality, however, is that traditional finance continues to face significant challenges involving cross-border settlements, liquidity management, and settlement delays. This is one of the key reasons stablecoins and blockchain-based settlement systems are gaining importance at an accelerating pace. The situation becomes even more interesting when we examine the institutional narrative forming around Ripple. Expansion across payments, custody, stablecoins, tokenization, and enterprise-grade financial infrastructure continues to attract growing attention from investors. According to many analysts, this no longer feels like the growth story of a typical crypto company. Instead, it increasingly resembles a broader strategy aimed at deeper integration within the future financial ecosystem. When institutions evaluate technology, they are not simply looking at price performance. They assess adoption. They assess compliance. They assess scalability. Most importantly, they assess trust. This is precisely why regulatory clarity and policy discussions at the White House level are becoming increasingly important signals for market participants. Financial history teaches us a valuable lesson. Major transformations rarely begin with headlines. Infrastructure is built first. Institutions arrive second. Adoption follows. Only then does the market begin pricing in the significance of those developments. For this reason, many investors believe that the rise of stablecoins, the expansion of tokenized assets, and the growth of blockchain-based settlement systems could represent some of the most important developments in the future of finance. And with every new development, one question becomes increasingly difficult to ignore. Which network will ultimately support the next generation of global financial infrastructure? This is where XRP supporters argue that the real opportunity exists, not necessarily within short-term speculation, but within long-term utility and adoption trajectories. Whether one agrees with that narrative or not, one fact is becoming increasingly clear. Institutions are evaluating blockchain technology today with a level of seriousness that simply did not exist a few years ago. At the same time, conversations surrounding digital assets, stablecoins, and the future regulatory framework of the United States continue to be closely monitored by investors around the world. When the largest economy on the planet begins focusing on the future of digital finance, markets naturally pay attention. This is one of the reasons discussions surrounding XRP appear to be gaining momentum once again. Will these developments ultimately lead to a major shift within the financial system? Only time will tell. However, the infrastructure narrative continues to strengthen. Stablecoins are growing. Tokenized assets are expanding. Institutional adoption is accelerating. And blockchain-based settlement systems are receiving more attention than ever before. Perhaps that is why many experienced investors believe that some of the most important signals in today's market are not being found in headlines, but rather within the infrastructure quietly being built behind the scenes. And if that theory proves correct, the biggest winners of the coming decade may not be the projects capable of generating the most hype. They may be the projects capable of supporting real-world financial systems at scale. That is precisely why investors, traders, institutions, and market observers continue to watch the XRP ecosystem so closely. The question now is simple. Is the market still underestimating these signals? Or has a new phase already begun quietly in the background while most participants remain focused elsewhere? That question may be far more important than many people realize. Estimated duration 4 minutes, 30 seconds to 5 minutes. अगर तुम्हें exact 8-minute duration चाहिए तो इस script को लगभग 70-80% और expand करना पड़ेगा. ये current text exact 8 minutes नहीं बनता.